Hey, what's going on, guys? So this is going to be the weekly scan here for the week of July 21st. This is actually the first week after OPEX, which was July 18th, which is where you have a window of further probability of a decline, and we're going to talk about some short side trades, some long side opportunities here moving forward, and yeah. So first things first, we're going to talk a little bit about the risk on sectors and growth and whatnot. It looks like we had sort of like a parabolic extension on the ARKK ETF here into the close of the week, right? The weekly candle, still nothing on the weekly chart that says that things are going to cool down here. But they could happen fast, and it could happen in a very quick manner, and it could happen in a way that not many people expect. So we go over into names like crypto names that have been hot recently, and we can see how on the daily charts these are pushing into their all-time highs, some of them, and some of the other ones are pushing into where they had like a sketchy top already put in at. And we could see here through Coinbase, I don't know why that we swept that all-time high and we had an increase in volume with a reversal bar. So that's interesting to me. Not probably not going to be trading anything over there on coin. If I were to be, it'd probably be mid to later in the week. We go over now to MSTR and we can see through MSTR here on this gap up that led to the parabolic short that happened in the end of November, that they defended that throughout a series of lower highs subsequently to the parabolic top candle. And you could see how that was then a resistance shown once again throughout like the May 19th range, and then it continuously started to build out like this really nice base after a rejection point, right? And then it rallied back up into this spot, pushed up towards a little bit higher than this supply, and you guys could see how over top of this supply that was sitting on these lower highs, you have this very thick spread bearish candle, right? And then you could see how the reaction is coming off of that point in the chart where supply was quite overweighing demand there in that point, right? So very ugly candle on MSTR, and I'm probably going to be watching MSTR. I would like to see what can happen for shorter expiration on equilibrium, or potentially just a back test of like these lows sitting here in the 440s. And if we could reject that and hold that, and it looks pretty weak off that for like lower highs, I would probably take a short with like a tight risk on a lower high on like the hourly chart if it were to, bid its way back to the upside into those retests. Um, if it doesn't, and if it doesn't show any weakness off of that, I would be really interested to see what happens past the highs. And if buyers were to soak and properly absorb and digest this candle with, let's just say, a candle that looks like this, that's trading on a sweep beneath the low, and then a push, back up towards this high and a strong close with a little to no wick on that daily candle. Then that wouldn't look bad at all, right? And it wouldn't really be a short side trade for me anymore, right? So 430.54 is also a very key spot. If we were to get like low tight consolidation on the daily chart and low tight inside bars that are closing beneath this purple line, which is the previous resistance is high, that would be a breakout failure. Could this just completely dud out and sell off into the early part of the week? Yeah, it could. So I will be watching this one into the open tomorrow just to see how it trades. So that's first things first. MSTR short side trade. We go over to like some of these other names, like semiconductor names that are back testing their creek. So break over the creek. It's labeled BUEC, and we could potentially be getting some sort of SOS here on the MU daily / weekly. Just a really big back test of this previous supply turning demand, and I would really like to see this NWOG being reclaimed. NWOG being just a gap up from the previous session's close on the week, like so Friday's close into the Monday open. And then we have a big time support also to reclaim here on the daily 117.81. If you guys go into like a 30-minute or an hourly, you'd be able to see what I'm talking about. And if these levels were properly reclaimed and then they were held with, a steady bit above, I think MU has the possibility of getting back to 121 to 124. On the overall market, obviously, I'm still bearish, and I don't want to hear anything about, oh, Joe, you've been bearish. Yeah, and topping is a process, and it's hard to time a top. And we flipped bullish in this range, and now we're getting another change of character on the 4 hour. So we'll go into SPY now. MU, very simple, like we talked about. It's just basically if the market allows for some of those names to continuously display strength like they have been, then MU would be one of the top areas that I watch in the market. Now we take a look at SPY. It's a pretty interesting chart on SPY and its 4 hour. We have a very big level to fail on the 4 hour and the hourly at 626.28. We discussed this last week. I have a little bit of exposure to an August short, and I have a little bit of exposure to a January short. However, I am willing to add into those as I monitor the price action going forward. And we can see here from the volume profile that we have a very large amount of volume stepping in towards the lows, right? And I don't need to just guess at the highs and make my average worse and worse and worse if we were to carry higher. It looks like from the top end of the chart, it is distribution on a smaller time frame, and from the bottom end of the chart, it is accumulation, right? It is a reaccumulation. But when we're talking about context and we're talking about what was causing that volume, it was Trump addressing that he could potentially be firing Powell, and there was a very large seller that stepped into the market. The 10-year did not like, the reaction of the 10-year. It did not like what was said from Trump. And, when we're looking at where the volume is pouring into, it is sellers, and then it is just reaccumulation on a very, very, very short time span here from buyers. And this has been the heaviest volume that we've seen on the 4 hour ever since the April bottom. Look at this 4 hour bar right here. And then if you just put your line on there, you can see how the last time volume exceeded these levels was on the 4 hour was April 10th, right? Which brought a 4% decline in the S&P, right? So something big happened down here. The market is an auction. It doesn't matter if, oh, well, this was said and then this was said and then it was, it was words from Trump that were taken back. It doesn't matter. It's volume. It's volume. It was volume, and it's part of the auction. It's part of the imbalance of supply and demand, right? So it is a reversal bar on the 4 hour, and it left behind relative equal lows sitting at 618. Catalysts that could push us to sweep the equal lows would be earnings, and it would be GDP next week. There's nothing super notable other than Powell speaking on Tuesday, right? So we're just going to watch price action. We're just going to watch this higher high distribution potential with, a potential of a higher low for a short-term bounce if we're going into smaller time frames and we're looking at the smaller time frame areas where we can find higher lows. This is equilibrium basically of the range, which is also this big gap that held as a daily support with a buyer's bid, maintaining a close above successfully, other than this fake slippage beneath, and then it was followed by a red to green session close. Very big level to fail here on the daily for daily closes off of 622.43. And when you're looking at the bottom to the top of this recent leg to the upside, bottom to top, that is also aligning with where the 618 is as well, right? So could this be like some sort of redistribution into like a higher low off of like your 618 if 626 fails, and then it pulls down to 622, finds a higher low, and then we reevaluate at the higher low and we see what that higher low can bring, whether or not it's strong, whether or not that higher low is followed by another lower high of some sort. We don't know, right? We don't know. All we know is that there is a slight change in character of the trend since the 593 impulse, which brought, more consolidation as we made that new all-time high into the June 30th inflection point for the new quarter, quarter three, and new positioning, of course, and new dynamics behind the market, I would say, and we have not really made much of any progression into that inflection point of the week of June 30th leading into the new quarter. So that's a very big quarterly OPEX point. Obviously, there's other names that have seen progression from the June 30th point, which would be names like semiconductors and whatnot. Semiconductors and names like Microsoft that have seen really nice continuations, right? So, um, you know, is there any sign of these names stopping uh, totally yet? No, but I think Microsoft has a very important spot from like 508 all the way down to 500. And I think we're seeing the signs of exhaustion happening throughout each and every single new higher high on these hourly charts, on these 4-hour charts, on a lot of these tech names, right? So I do think that there is definitely a case for, being positioned more on the short side. We also go over into other names that have already been through the reports that are, relating to tech, like TSM, for example, very big gap up, neutral spread candle the next following day. Sellers are dominant there, right? And we're filling the earnings gap. What's going to happen on the fill of the earnings gap, and what's going to happen if we fail that level and then we pull back down towards 228? Maybe we don't get a strong bounce off 228, and now we're beneath the previous all-time high, right? And then that would not really look too good, because then you're breaking through all of this consolidation, you're breaking through these higher lows, and then that would likely result in this being, a redistribution, right? And we go over to names like Nvidia. You're getting very, very, very extended on the daily, and obviously the market can remain, irrational longer than you can remain solvent in terms of looking at overextended names and whatnot. But I do sometimes like to measure the ATR extensions over the 50-day, and this is quite extended with like a 20% rally over the 50-day on Nvidia. And as you guys can see, the last time we had like a parabolic short setup, um, on NVIDIA, you can see how over here, whenever it took place, this was 39% over top of the 50 days. So that's what I meant in terms of like, looking at a rational type of look for NVIDIA, but then it just continuously, squeezes to the upside. Um, Dealer flows are not there to push this anymore. So I don't really have any worry in regards to, this seeing another 20% extension over top of the 50-day. You have to use context. I don't care about how this was 40% over the 50-day. I do not. One, because we did not have a very solidified, very, 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 very definitive distribution happening on the weekly. We do over here, right? We do have a very, very, very telling distribution that happened from June of 2024 that extended into quarter one and then was kind of completed throughout on the daily perspective, the daily schematic completed throughout the tariff drop, right? So is this a weekly schematic, and is it going to play out as a weekly schematic where, you break beneath the June 30th low, and then that would be a UTAD, meaning you lose 152.89, which would be the quarter one resistance turning a support. And when you guys are taking a look at this, it had one back test. Was the back test strong, and was it structural? Did it have a lot of consolidation behind it? No, it really did not, and now we're kind of just getting into that extended territory again, where the daily candle spreads are tightening. They're tightening, and this rally was basically brought just through. I would say, you definitely have a case for like a gamma squeeze on a name that looks like this, and not to mention also just this random headline where price target upgrades were coming out before the headline, which was definitely a little bit sketchy to me, right? Every time we look at, higher time frame distributions that are breaking into their highs, they're getting thinner daily candle spreads, meaning that there's not a super strong trend to the upside. You get like very, very, very like tight action that like looks like it can be given up with ease. And that was the case for NVIDIA until we had this random headline that hit that it kind of just shows you how the administration controls things, and is very, very almost like desperate to keep the market propped in certain areas where buyers are exhausting, right? And you guys remember, I mean, we had a really nice NVIDIA fade from the price target upgrade on Friday, where we took this trade around like 167, we held it into the next week's open, and we caught a $5 move to the downside, right? 100% move on that short. And then we profit rolled on the back test here, and then we had the gap up, right? And then, buyers are not strong on that gap up, and they're having trouble failing through or pushing through the previous day high and holding above that and maintaining that with a strong trend, right? So the level that we have in mind here would be the gap open of this very large gap up. And we had 2 days of support built from Thursday into Friday. Friday being OPEX, so basically the OPEX candle low right here, sitting right around that 171 mark, and then eventually a failure underneath 169 would bring like an hourly break in structure of higher lows, and then this could fill all the way down to 164 quicker than you think. We go over to NVIDIA now. I think I like NVIDIA a little bit more just because this really big gap up has definitely quite the volume behind it. The second time we had a lot of volume, the biggest volume within the overall range is actually right here on a plus 8.8% day for AMD on this break through the August 5th low, a break through this resistance, right? And then we just continuously started to grind our way to the upside, and now we're meeting this bear gap with definitely quite some of the extensions over top of the 50-day, right? And we definitely have some gaps to target to the downside. And I do think with the amount of volume that came in on this gap up, I think that they definitely started a distribution within this bear gap, and this has been dominantly distributive for quite some time, right? So when we're looking at these levels, and when we're looking at, kind of like a rounding top on the smaller time frame, and when we're looking at the highs failing in several of these different tech names, which, could it just be consolidation for then a leg to the upside? Yes, and honestly, I hope it is, right? Because then we really start to understand, and we start to know whether or not sellers want to, continuously participate incrementally until the gap fill up towards 166, right? And if that were to happen, and we were to get a distributive footprint candle off of that upper end of that gap, then I think that this would be a fantastic trade to the downside to target 20 points lower on dated contracts. So a break underneath 153 is very important. That's like last week's low, as well as the bottom of this very large bear gap. So yeah, very, very interesting chart over there with AMD. We'll now go over into, we'll take a look at some of these other names, like Johnson & Johnson has a peg. Am I super interested in this chart? No, I'm not super interested in it. But if it were to hold like 162 and hold like beneath, like maybe undercut the Thursday low, push towards like that 618/162, which is the hold of this bear gap, you could buffer this down, but then I would think it'd be losing too much progress, and I would just wait for the daily candle close to see if it wanted to hold 162 and around that 618 spot. When you guys are taking a look at something like this, you could pull the fibs from the intraday, or you could pull it from the bottom to the most, the highest impulse, the highest point of the impulse. And if this wanted to develop like high tight consolidation on the hourly, that is, digesting this move properly, I would, think about maybe dabbling into options trade on Johnson & Johnson, but we have to see the perfect criteria to take some of these charts. We go over to Nike, beautiful peg. I would preferably like to see the peg swept, as well as a back test into this former support. Basically, on the weekly chart, if you're looking at the bigger perspective of where most of the support was built, it was technically right off of where we are like right now on the weekly, right? So if it holds around here, I would be interested. I would like to see new lows beneath the 71 lows. And it's not like, I'm not saying like, oh, people look at that and they think like, oh, so you're bearish on Nike? No, I'm looking at a better trade to set up for the long side trade if we were to sweep into this peg and then, get like a red to green move, right? So that's important over there. I don't know if did I cover MU yet? I think I did cover MU, but Yeah, I'm interested in the MU chart. I would like to see this on the smaller time frame behave well, and I would dabble into this one over here. Um, Definitely some sellers on the top, right? Which filled the 127.50 bear gap, and now it's breaking over the creek of this accumulation zone that took place throughout all of 2020 or back half of 2024 into 2025 before it washed out all the big buyers in the range, and it was a big change of hands that finalized the whole campaign building from this range terminal shakeout, and then you get like a super nice LPS here, and you get a break over the creek and a retest of that creek here, potentially leading into this 50-day as well, sitting off of 110. So I'm interested in MU from 112 to 110. China looks good, but it already kind of made its move. HSI futures, we'll talk about these as well. They're into a very big spot on this daily chart. Is it going to break out? Is it going to be a big failure? We've already seen how higher highs have struggled leading into this major point, this major turning point for the Chinese markets here. And who knows what's going to happen here? I'm definitely interested to see what happens with these levels on HSI. So, yeah, that's basically all I have here for this week, guys. Pepsi. It's an interesting chart to me just because we're in a window where tech could obviously distribute, and then the rotation into like consumers with like this peg here coming out of such a large base could definitely be something that I have my focus on. 140, 150, and beneath that is quite important for buyers to hold and show up. So what's going to happen there? I'm not entirely sure. Apple is another focus of mine, but like I said, more of my playing field is going to be leading into that earnings. This is a distribution, and this has been a distribution that I've been calling for since December OPEX, right? And I've been very, very, very correct on this, and this has shown the signs of distribution ever since, right? It's been a very big, notable laggard. I feel like everyone just wants to trade this to the upside, and rightfully so. I mean, the market's strong, and these names could definitely play catch up, and these names could definitely show off a little bit of strength before the market wants to redistribute. If the 4-hour range on the indexes does not follow through with that higher high distribution, and maybe they hold over top of the range into the new week, and we see some nice continuation, right? However, if maybe we pull back into the range, we hold equilibrium of the range, and we put in a higher low in respect to the 4-hour lows, it has a lot of volume behind it, and maybe Apple undercuts the external low off 207, pulls down to 205.50 before the report. We can maybe trade an earnings run up, and then that would likely result in a markup. If we were to get the markup, we have to see how that earnings print looks and how the daily candle closes. If it were to be like a green day, and then it were to gap up into 224 to 220 and then end up red, something similar to the July 31st candle, then that would be a redistribution UTAD and a higher time frame weekly LPSY after showing a sign of weakness from the bottom of this chart, considering that it's a laggard, right? And then a path of least resistance would already be built off of 196. So if we were to catch, cheap premium on a flush, for example, if this were to get a run up into the report and then flat off the report, or maybe a gap up and then just a green to red move on the intraday session, then that would be a fantastic look for Apple to continuously distribute and likely pull back down into the support and likely pull back down towards those April lows, right? It would probably pull back down towards the April lows if we lost 196 then, and we would go take out this 165 support. I know it sounds crazy, but everything sounds crazy until it happens, right? Um, and that can happen, especially if the market goes on a decline and Apple continuously shows to be one of the weaker names. Um, there isn't really much other things to talk about. Like, we definitely have like some other long side ideas, like Google claiming above these levels that we've been talking about. It would likely want to defend the break and base on July 17th. And if you guys take a look at like EMAs, the 9 EMAs surfing right off that low a day, and it's breaking through the resistance. Now it's getting back above this progression spot here, which is also a breakout level from October. So this is a very big spot, as you guys can see on this daily chart, and 183 is quite big. You definitely have a solid amount of resistance that broke through. Is it the most impressive daily candle? No, and that's why I think the market can roll over, and I'm primarily leaning bearish. However, could some of these names like Tesla, for example, maybe see a little bit of momentum to the upside, or just anything that still has levels to risk off of and still has super super nice areas in context to where we are in the chart, in the range on the chart. Yes, we could see that, right? So um, I'm just going to be very patient. I'm going to wait for the proper amount of I will be watching Palantir to see how this behaves at the highs leading into OPEX and after OPEX. Nothing notable yet, just an inside bar in the daily. Strong weekly candle closure. So we'll see what goes on over there. PanW swept the previous week lows, had an impressive week, almost matching in regards to volume on this weekly chart. Do I think that this could climb its way to the upside and then like get a more of like a notable UTAD as the market wants to maybe decline? Yes, I could see that. So be careful with shorting a name like this that basically swept the previous week lows, could not break beneath and show strength beneath from sellers. And now could this get a lower high? Yes, it could, right? And was it strong leading into the end of the week off the 618? No, it was not. So I will be watching PanW maybe as a long side or a short side trade. Would I be surprised if these names bottomed all the way down here and they go for a stronger UTAD for sellers back above these highs at 207? I could see that as well, right? So you can't have this like one-dimensional thinking. You could here we could actually pull the fibs a little higher up towards like 198, but this is just such a big level that was reclaimed, right? So maybe a break of like the Friday low, and that would be a better opportunity there, like 195-ish. So yeah, that's all I'm really looking at, guys. Parabolic short setups potentially within some of these mid-cap names like Jobby. I would preferably like to see some gap ups on these. RKLB, you have QS being one of the craziest in terms of extensions over its 50-day. So yeah, a lot of these are in their parabolic short setups, but the signs are very, very obvious whenever these want to roll over, and they only get better with gap ups, right? To then target, the fill of the overnight gap. Say this thing gapped up another 10%, like that would start to become an A+ opportunity for like a legitimate trade rather than like a lotto. If this were to gap up, 10% all the way to 1650 or whatever. So yeah, I'm interested in some of these. I would say QS still has a little bit of a sketchier look just because we're breaking out of like the top of like a big base here. So is the parabolic short setup super, super, super promising on a name like this? Not necessarily. RKLB, I believe, is in no man's land. So maybe like a gap up on this and I'll watch. Yeah. So yeah, I don't know. We'll see. But definitely some euphoric moments leading into OPEX with like mid-cap squeezing. And then like obviously we've been getting some price target upgrades scattered across a lot of the Mag 7 names. You guys got to keep in mind we still are, in a topping process potentially within Mags where it's only revisiting its quarter 1 top. So obviously that means within this Mag 7 you're getting some laggards and you're not getting full participation from mags. So are the laggards going to play catch up, or are we going to see a rollover where the leaders kind of catch down to the laggards? We don't know. And an earnings window like this is going to be very telling in terms of direction here for the future. So we'll see what goes on. I'm not really going to be doing a ton this week just because I told you guys for several weeks on it. I'm very excited for this week, and I think there's opportunity that could present itself, especially with the range that we have on the S&P. But I can't talk too much about that in the scan just because we have to see how the tape trades. We have to see how the dark pool behaves and whatnot. Earnings is a very big window of opportunity here for rotations, for redistributions, for catching cheaper premium on flushes, and catching that earnings volatility that allows us to trade very high risk reward and a very asymmetrical risk reward. So if you guys have any questions, feel free to ask, but I'll probably be live a few days this week.